Welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going to go over our weekly numbers. It's week 14, and this is filmed on October 26th. So let's go ahead and go through our weekly numbers. So our current portfolio net worth is $227.59 as of October 26th, which is today. We have our portfolio weekly data for week number 14. So this is from October 21st to October 26th. We have a money weighted return of 0.07%. So down 0.07% for the week. And we have a market gain of 31 cents with no cash flow. So no cash in this weekly period that were deposited. We have our portfolio monthly data. Now you see this large spike up. This is where we deposited $30 cash into our portfolio. So it's not representative of our performance, it's just a cash deposit. Our money weighted rate of return is right here for a positive 1.04%. So we're up 1.04% for the month. And the month is from September 26 to October 26. We have a market gain of $1.52 and a dividend earned of 16 cents. Now, we've gotten to a point where we have an additional chart we can look at now. That's the quarterly data, so 3 months. So we've been doing this portfolio now for 3 months every week. We're making these videos for over a 3-month period. So now we can see weekly data, monthly data, quarterly data. So we can get further and further out on the time horizon. So you can see performance over time. Now, whenever you see these stair steps like this is whenever we had a cash deposit. So every third week, we deposit $30 into the account. Bi-weekly. Every week, I deposit $10 cash just out of my check, just into the account. And on the third week, once it exceeds $25 in the cash account, it'll deposit into the portfolio and it'll allocate it to each of our positions. So this is 1, 2, 3, 4 times. So $120, you see the net cash flow right here. $120 of cash over a 3-month period, we deposited into this account. So this starting value is from July 26 to October 26, so that 3-month time period. And over that time, we had a money weighted rate of return of 5.67%. We had a market gain of $7.09, and we had dividend earned of $1.03. So this is now going forward, we can have, like I said, 3 different views: weekly, monthly, and quarterly. So that'd be good. The next one is more of a long-term one. That'd be the yearly one, but that's going to be like 9 months. So at the very least, we still have this data we can look at. But quarterly gives you a good perspective of how this portfolio ultimately performs, because it's not a day trading portfolio; it's a long-term investment portfolio. So the more data we have over a long period of time, you can see how it performs. Now we have our percentages. And you notice on the side here, I made some changes. So we kept gold still at 30%, still our best performer. Government bonds we brought down to 20%. So they were at 25%, we brought them down because there was a reversal in the trend. So we reduced our position. Our dollar position is still at 15%. Our commodities we changed last week. We increased it from 10% to 15%. So it's still at 15%. And the new one we changed, and of course I picked the worst week to do it, and I said I would, but I increased my position in stocks by 5%. So you see it's down 2.7% here. Of course, the week I choose to do it is that's the week we're down. I knew that was going to happen. Anyway, and then we have our Bitcoin still at 5%. So let's go over the percentages. So gold for the week up 0.79% or 54 cents. Government bonds down 0.83% or for a loss of 39 cents. US dollar up 0.85 for 29 cents. Commodities up 1.15% or market gain of 39 cents. Again, stocks down 2.07 cents for a loss of 68 cents. Like I said, of course, I picked the worst time. And then Bitcoin also down because, these things are kind of similar in how they trade. Bitcoin down 2.7% or for a market loss of 31 cents. So that's our weekly data. Our monthly data, as again, the target allocations are still the same. So gold up 3.2% for a market gain of $1.98. Bonds down 2.46% for a market loss of $1.31. US dollar up 3.68% for a gain of $1.13. So this has been a good counter trade for the bonds, having dollars. It's been a good counter trade. Commodities are flat, 0%. US stocks down 0.56% for a market loss of 13 cents. And Bitcoin up 5% for a market gain of 48 cents. So that's the monthly, and now we have our additional quarterly now. So we got our quarterly chart, right? And now we have our quarterly percentages. This is great. So gold, you could really see over time period. Look at this, 15.54% over 3 months. So a market gain of $6.88. Great performer in the portfolio. Great performer. Government bonds down 1.26% for market loss of 52 cents. Dollars, US dollar, up 2.37% for market gain of 61 cents. Commodities up 0.93% for market gain of 18 cents. Stocks, which I should have been long for longer, up 3.92% for market gain of 63 cents, although gold's way better, 15% versus 3%. And IBIT up 14.67% or $1.25. So now you see on a 3-month time horizon how the numbers are really growing, you know? And the IBIT won't be a full 3 months because remember we switched from the BITO ETF to the IBIT ETF because the BITO ETF was losing trend correlation with Bitcoin's price. So I wanted an ETF that had tighter correlation. Similar with gold and dollars, I want like tight correlation to the price of the underlying asset. So this is our quarterly information here. And as I said, I increased my position to stocks. So I got my RSP, which is my S&P 500 equal weight. And then I have my government bond, US Treasury bonds ETF. So I reduced my government bonds from 25% to 20%. So it's at $10.70. And I also sold off 98 cents worth of gold as well, just to rebalance. And I put that into my stocks, $11.45. So I increased government bonds from 25% to 20%. And then I increased stocks from 10% to 15%. So I had the one buy. It was on October 21st. So like I said, I'm late to the party with increasing my allocation of stocks. I should have done it sooner, but you know, we'll see what happens. And of course, like I said, the week I choose to do it is the week we take a hit in stocks, which was expected. So we have our Illuvium staking. Current price as of today is $33.06. I bought $40 worth more and staked it, which I'll show you in a second. So we're now at 4.23 ILV staked for a price of $139.75. And you see we have our previous rev divs. We've had 2 payments or 2 distributions so far. So now we have 4 staking, 4 token staked. So the first one back on July 27th, that was 200, which unlocks in 274 days. We have the 1.32 IOV we staked. Then on August 24th, which will unlock in 301 days, we staked 0.79 ILV. So this was $40 at the time of purchase. On September 25th, which will unlock in 334 days, we unlocked 1.01 ILV, which again was $40 every month. I just buy $40 worth. And then Illuvium on October 25th, which was just yesterday, which will unlock in 364 days, so just a full year, bought 1.11 ILV worth and staked it. So we have 4 stakes now, right? So we're increasing every month how much we're staking, because every time there's a revenue distribution, you know, we're going to get a payment of that. So the more we stake, the more we can earn, right? So now I'm up to 4 now. And as of right now, we have no new revenue distribution payments, so we're at 0. So like I said, we've only had the 2 payments so far. So no new revenue distribution payment. And this was my transaction. So from Coinbase, 240 yesterday. I bought for, like I said, $40 worth, which came out to a value of about 1.09 ILV. And then, like I said, I just staked it. So that's the transaction for that. Those are our weekly numbers. So now we get to the good stuff, get to the charts. So as always, starting out with our strongest asset. So gold, you saw that quarterly performance up 15%. This trend is still just indomitable. It's not stopping. It's even peaking out above this trend a little bit right here. I don't know if that's sustainable. Let's zoom in on that. So you had it broke out. This is a monthly chart. So you broke out, or sorry, 1 month chart. And it dropped back, and then it kind of came back up again. As of right now, it's out of that trend line. It was out of the trend line before here back in April and May, and then it kind of came back in and kept going. So likely might happen again, but at the very least, gold is still a very strong performer. And as always, I like to compare it just to stocks, just to see where people can kind of understand. So stocks, oh sorry, wrong one, year to date. There we go. So year to date this year, 2024 from January 1st today, the S&P 500 is up 22.46%. Gold's up 31.99%. So gold's crushing it. Now it's like 89% higher than the S&P 500 this year. On a 1 year, they're pretty much the same, right? Doesn't matter which one you would own, it's pretty much the same. Because even though it looks like the S&P had higher return here, came back and dropped down more. So there's more volatility in it. But gold has just been such a strong player in our portfolio. It's been doing great. Absolutely love it. Now, go to government bonds. So here, looks like it's already breaking this trend a little bit. So remember, on a 1 year chart, we had the red line, which is our bearish trend signal, and the green line, which is our bullish trend signal. It broke out through here. This is when I increased my position. And then it kind of came up here and had the reversal based on the jobs report, and it came down. So I reduced my position. Now it's kind of right back around this area. So I don't know if it's going to continue to drop down or if it's going to follow this green line. So we're going to see. So I can extend both these and kind of see what happens. Right? Is it going to go below the red line and stay below it, or is it going to go back up above the green line and stay above it? We're going to see what happens. So right now it looks like it's starting to come back down. So bonds, even though we've had one rate cut, interest rates, interestingly enough, on the long end, like 5, 10, 20 year, it's gone up. So it's interesting to see that. So we're just watching to see what happens. But I put in 30% to bonds, thinking it was like this was going to be the turnaround, and we're still waiting. Like I said, on this 5 year chart, though, you see bonds have come way down since the pandemic. So I was looking at this as like hopefully a bottoming, and then we're going to turn around. But I'm still, waiting to get more data. As of right now, it's breaking my trend line, so I'm gonna have to keep watching it. US dollar, just crushing it right now. I'll have to extend this line out now. Let's see. I'll go a little further. There we go. So now, remember before it was bearish, it was coming down. Look at this strong uptrend right here from September 30th, just on up. Green, 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 green. Look at this trend. 2 3 months. Look at this trend. Just the dollar climbing, 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 climbing. Out of this bearish trend, climbing, climbing. Trying to get up to this bullish trend. Like I said, with rates rising, the dollar's rising with it. So I'm just like, shit, right? But this has been a good reversal because my bond position coming down, that's a loss of money, right? It's coming down. My dollar position counter trend coming up, right? So it's like, because I'm diversified between the two different assets, I'm getting that correlation. So I'm getting negative here and positive here. So if I was just all in on bonds, it'd be going down right now. If I was all in on dollars, it'd be going up. But right now they're trading against each other, so it's saving my portfolio, keeping it positive with this positive return. But I don't know if it's going to continue. So we're going to see what happens. Just like I'm going to wait to see if this bond trend comes down. I'm going to wait to see if this dollar trend continues up. We're going to see what happens. But I think long term the Fed's going to keep lowering rates at a slower pace, but ultimately it's going to make the dollar go down and bonds go up. But we're still waiting to see that. Then we have our commodities ETF. Just zoom out to really show this. So this goes back to July 22. So over 2 years, it's just been in this pretty steady uptrend, just like we are right now. So I think inflation is still coming. I think it's still still going to be growing at a slower pace. It's not going to jump to like 9% like it did in that one time, like a year or two ago. I forget when exactly. But I think it's just going to continually steady up because we printed so much money during the pandemic, caused a lot of inflation. I think we're still feeling the effects of it. So as of right now, we're still in this long 2-year uptrend for commodities. So I increased to 15% last week. So I want to capture some of that profit. So if commodities do continue up, I'm gonna get a cut of that. Let's start commodities. So again, I increased my position for stocks from 10% to 15. Of course, you see this little dip right here. Of course, when I picked it, let's see, where is October 21st? Right here, boom, look at this. So literally this came up. This is hilarious to me. So it came up, right? Came up, and then right here, Mark's like, okay, I'm gonna buy now because I can't just miss out on this anymore. And then crash, comes down, right? So the 21st is what you saw that transaction. It's when I increased by 5%, and then boom, it came down. So I knew I was gonna pick the worst time, of course, right? Still overall in this bullish trend, right? Hasn't really broken this trend. It's kind of come down a couple times back here in August. This was like that really volatile day, August 5th. Made a video about that. And it just barely touched the line here, but overall it's kept going. So I'm still gonna keep my position in it at 15 for now. Like I said, unless that trend breaks, we'll see what happens. But like I said, every week I've been talking about how this trend's been really good for stocks, but I've just been not optimistic on the market. But the market has been relentless either way. So I'm kind of dipping in a little bit more by increasing to 15%, but it's only 15% of the total. So that means 85% of my investment are in other asset classes. So it's not just stocks. So even if I am right, and this does come down because I think the economy is doing bad, it's only going to be 15% of my position. So if it comes down, I'm right, but then it sucks because I lose money. But if it goes up, I'm wrong because I thought it was going to go down, but then I make money, so just depending on how you look at it. But as of right now, we're still in this trend. So I'm going to keep watching it. And like I said, if it breaks this trend, I'll have to reduce back down. But we're going to see what happens. And last but not least, we have Bitcoin. So it broke out of this downtrend that started back in March. So we had a breakout, came down, or I should say we have our peak, our market peak. And then we had a breakout in June. We had a breakout in July. Came up in September. And here we are now, October. And so far, this has been the most sustained breakout. It's coming up, and now it's kind of going sideways. You see, from October 14th to October 25th, this has been pretty sideways. It hasn't done much. Right, so we're not seeing a consistent trend reversal yet. This might even come down. We don't know yet. But we're just watching it. Like I said, I trade Bitcoin and stocks similarly just because they'll tend to have positive correlation, especially with the NASDAQ. I feel like Bitcoin and the NASDAQ together, there's like some good positive correlation. But I'm just watching to see what's happening. Still keeping it at 5%. Not really going to change that. If there's a trend reversal and, stocks are going up at the same time, Bitcoin's going up, maybe it hits its all-time high and starts going up from there, I might increase a little bit. But because it's more volatile and it trades 24/7, I want to be more conscious of my risk. So I don't want to put too much money into Bitcoin because it's just too highly volatile. But anyway, that's our numbers for the week. Like I said, the big call-outs were decreasing bonds by 5% and increasing stocks by 5%. So now 30% gold, 20% bonds, 15% dollar, 15% commodities, 15% stocks, 5% Bitcoin. So that's kind of what we're sitting at. Normally, I would like to have at least one other asset around the 25 to 30% range. Like I had bonds briefly, but right now there's still volatile times. Plus we got an election coming up, so I'm sure people are hedging their bets, trying to see what's going to happen. So I'll just keep following it, and every week I'll update you. So as always, if you have any questions, comments, or criticisms, let me know. Thank you for watching, and have a good day.